Taiwanese index, as you can see, is up over 2%.
The immediate resistance which the Bank Nifty needs to take out is 50,830.
The key highlight is that the automotive segment is actually almost EBITDA break-even.
This becomes more mainstream for going out with friends, families, even on a normal adventure trip.
The Nifty, which is at 25,313.
We keep talking about the overall improving fundamentals. There could be blips in the interim.
Today in the 20th year, we are talking about the $100 billion market cap.
The Nifty high today was 24,400. Compared to that, we've given up about 150 points from the session highs.
The beauty of this is that we have really put our heart behind making sure a single gives what a biker needs.
Vedanta is looking to sell closer on 11 crore shares in Hindustan Zinc.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
All right, well, that's the day so far. And I think for the first time in at least a fortnight, we can say that the market is really looking robust, looking healthy. And it is, I mean, there was one nervous bout early on when the market kind of gave up 100, 150 points from the day's high. But since then, it's kind of recovered. It's moved back to the high point of the day. So it's looking really good. This is Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Surabhi here. Nigel is joining us from the newsroom floor. Guys, hi, good afternoon.
Hi, afternoon. And looks like we're going to close this week on a positive note because now the Nifty Midcap Index are all up about 0.5% for the week. Remarkable intraday pullback.
Oh, absolutely. And I mean, it's just been up in a way because the recovery was looking a little wobbly in the first half, but then the bulls have taken off. And I think we've got several engines firing. So right now it's a bit of a turbocharged street with banks, with IT, and so much more going on.
Well, that's right. And as we speak, we're nearly at the 20-day MA, and y'all were talking about that nervous moment earlier today. Well, that was the moment to buy the dip, right? Because from being up more than 250 points, the Nifty was up only around 80, 85 points odd. And if that dip was bought, well, it would be good times. As we speak, we're at the 20-day MA. The bulls actually would have preferred a close at 230 instead of 330 because it was, we're closing bang in line at those resistance levels. So let's see how the next 60 minutes goes.
I don't know, absolutely. This is, as we were discussing in the morning, really negative sentiment. Near-term sentiment had really soured quite a bit. And then a complete 180 about face as far as global markets go. And this is, I mean, essentially that playing out. I think flows will be interesting to see because FIIs have been aggressive sellers. Locals have been aggressive buyers. So will that start to turn a little bit? I think that'll be something to watch. I mean, locals, of course, have been buyers, and perhaps they'll be buyers today as well. But what foreigners are doing on a day like this should be interesting. Now, Nifty's taken out some resistance levels on the upside. The graphics will come up. So the first resistance it's taken out is 24,472, which is the swing high on the 12th of August. That was level one we put out in the morning. And the second was the 20-day moving average as of yesterday's close. Day before yesterday's close was 24,490. We are above both those, actually around the second one, which is the 20-day. But, I mean, at the day's high, we were about 24,500. The next kind of, the next target in that sense, if you manage to close above this and, market gains momentum, is going to be the lower end of the gap area, which is 24,686. The gap area is basically nothing but that around the 2nd, 3rd of August when, global markets cratered, there was a big gap which was created, and the upper end is 24,686. So that's still about 160, 170 points away from here. Big move on the Nifty Bank, about 1.75%, but it has still not sort of come back to that August 12th swing high, and that is 58.30 on the Nifty Bank, because of course the Nifty Bank was trading practically at the lows while the Nifty has started to recover a little bit. Midcap and small cap indices are higher by about 1.7, 1.8% each. Market breadth on your screen, almost 3:1 advances to decline ratio. IT as a sector is doing very well. Real estate is doing very well. And private banks. These are the three sectoral gainers which are up the most as we get into the last hour this Friday afternoon. Reema.
Well, in frontline IT, you've got names like Wipro, Tech Mahindra up 3.5%. Then you've got an LTI, Mindtree, TCS with about a 2.5, 3% gain. You know, there are just 3 or 4 Nifty stocks which are in the red. And 3 of them belong to the pharmaceutical pack. So you've got a Divi's Laboratory, Dr. Reddy's and Sun Pharma. And again, the cuts are not meaningful there. The most is Divi's Lab, which is down close to about 0.6%. So the advanced decline ratio is strong at about 5 stocks gaining for 2 in the red. But frontline, large caps are all largely in the green. And it's good to see the mid-cap and banking stocks also move in step.
Banking stocks are moving high. I mean, the whole market, and look at what's happening on the mid-cap screen, right? The index is outperforming the large caps. 1.7% now up on the mid-cap index. And look at the stocks go. Ola Electric, stock of the day, 20% on Ola Electric and counting. So that's the big one. We'll just pull up Ola for you. Stocks at 133. Remember, we were discussing this in the morning. Just to remind you, the listing price or the issue price was 76 rupees. The stock is at 133 right now. We are talking IT. Some of the smaller IT companies are having such a good run. Look at Memphis, look at Zensar, look at Birlasoft. The entire mid-cap IT side of the market also is up and away. Look at a company like Uflex. The stock corrected after the numbers, and today it's up 14%. I mean, that's the nature of the rebound and the nature of buying in the mid-cap arena. Ethos, 8% higher. RHI Magnesita, Nigel's been telling us about the operating performance, which has been pretty good. That stock's been flying right from the morning. And even other names as Nippon Life, 6%, CDSL. So some of the side financials, aside from the main banks, some of the tertiary financial stocks are also having a very, very good session. So this is a weekend party. Looks like it's very much on, Nigel.
Right, and even it's the sentiment is such today, even cement companies that actually have seen quite a lot of selling pressure because prices have been moved up. There is some buzz that maybe, in fact, there'll be a price increase that could possibly be pushed through. And for the time being, the street is lapping out to that. Another day the street said it's monsoons, it's difficult to push through a price increase. But for the time being, just take a look at some of those intraday charts. You have Ramco that's moved to the high point of the day, JK Cement as well. Even if there's a price increase that's pushed through, you still have more than a month of monsoons. So, we'll have to see absorption. I'm not sure whether or not it will be absorbed. So just keep that in mind. But it's that sort of a day when any kind of good news is just being grabbed. Well, how do you position yourself in the final hour of trade? Mitesh Thakkar is back with us. Mitesh, at the 20-day MA is what the Nifty is at. And the Nifty Bank is a couple of 100 points away from those resistance levels that we saw last week, 50,700, 50,800.
So, Nigel, 2 things. One, I think, the 50% retracement level, which is 24,485, is just marginally clear. But looking at the 1 hour chart, I think there's a good chance that we will see this extension to about 24,600, 630, which is the 61.8% retracement area. So in that sense, I think long should be maintained. I was actually, very positive on IT and worried about the banking index, but the banking index is also reversed in the short term. I think, it's kind of managed to hold 49,700, 750 zones. Now, the first target on the upside for the bank Nifty is about 50,775 to about 50,820. I think once this 40, 45, 50 point band is cleared, then we'll look at higher levels. So in that sense, maintain a positive bias. On the stock side, I have a buy on OFSS. That's a buy with a stop at about 10,890. Look for targets of 11,170 or thereabouts, maybe even higher levels eventually. But that's the target we'll begin with. And then Ashok Leyland is a buy with a stop at 250 for targets of 263.
Thank you very much for that. Let's talk about Glenmark Pharma, up 5%, steady Q1 performance. This stock is now up 80% since the start of the year. Ekta joins in with the numbers, the analysis, and what the management had to say in the conference call. Ekta.
Well, the revenue was up around 8% this quarter for Glenmark. Margins came in line at around 18%. India did well. US was better than estimates at $93 million as well. The call as well really set the tone for the stock because it was started pre-market. So they did say that they have a net cash of around 359 crores on the books. We've guided for 19% margins. The key driver for margins will be the India business, the drug Realtris, respiratory products, lower R&D expenses. We expect India to grow around 10 to 15%. US remains challenging. Second half will see a US recovery. They're looking for partnerships in certain molecules that they have. They are looking for a meeting with the US FDA when it comes to their Monroe facility, and that's likely in September. They've completed remediation for their Goa facility. The focus will also be on the Buddy site. not as much. That's reduced for Glenmark actually, because they are saying that they could emphasize, or they could be looking at Europe becoming an important market for them. US is 24% of sales. Glenn Saldana did indicate that by the end of the year, Europe could be equal to US sales for them. Realtris, which is the respiratory drug, they made around $20 million in the quarter. They could make around $80 million for the entire year. Liraglutide is a GLP-1 inhibitor drug, which is basically a part of the weight loss category, but you have to take the injections on a daily basis as compared to semaglutide. They've launched Liraglutide in the Indian market, and they've said that it's a good product to have in their portfolio. But eventually, drugs such as semaglutide, which are not a weekly injection, it's once a week injection or thereabout, will probably take over in terms of the market.
Thank you very much for that. Prakash Diwan is now with us. Prakash, lots of buying seen in pharmaceutical names ever since the Q1 numbers. Even Q4 was strong. The Nifty Pharma Index is up 31% year to date, and in that Glenmark Pharma is up 80%. And it's saying all the right things, some recovery, hopeful of a recovery in the US in the second half, looking beyond US to Europe, etc. Which pharma stock do you like the best at current levels?
Good afternoon, Rima. So you're absolutely right. I think pharma saw that flight to safety, if you will, some time back, and that's kind of paid off. Here, the under ownership led to this front-ended gains in most names. If you look at Lupin, Cipla, even Sun for that matter, and of course Glenmark, we've seen a major part of that buying resulting into volume and price action. But going forward, it's going to be commentary like what Glenmark shared. That's going to be the anvil for any future allocations going up. You look at Marksons, smaller company, same kind of trend, has done well on all the promises that it made, has guided for even better kind of quarters ahead. So I think very clearly there will be opportunities there. But remember, pharma, Rima, as a space is fairly long. The list is long, and you'll have very different companies doing different things at different points in time. And that's exactly where the market will kind of recognize opportunities on a more stock-specific basis. But I would still back Marksons Pharma from that perspective. I really like what they've been sounding out. Natco has done some amazing numbers. We've seen that turnaround that happened after almost a gap of 18 months. After 6 quarters, we actually saw there was a very clear trend in revenue and profit growth, and that could continue because there are a couple of more triggers that are still, in the works. And I would believe these smaller companies, which are available at slightly more comfortable valuations, is what I would look at. But then, as I said, there has been a bit of a run-up, which makes some of these things kind of fairly priced. But on dips, and the market's giving you ample of those. On those days, you probably add some of these names which are from a PE multiple or a EV by EBITDA multiple also fairly decently available.
Okay, all right. Hi, Prakash. Good afternoon and good to see you. And I wanted to comment on cement companies. We had Birla Corp as well today. The stock was doing well. I think a couple of months ago it was at 1,800 rupees. Today it's at around 1,250 rupees. Management said the first half of the year is going to be challenging. And now there is some buzz that maybe in South India, East India, there'll be a price increase pushed through. Would you buy into that news or would you wait by? Because there's still plenty of uncertainty, consolidation, volume push, pricing is weak. How would you approach it? Anything you like?
So, good afternoon, Nigel. I did listen into your conversation with Mr. Saraogi of Birla Corp, and it's very clear while they do talk about the entire FY25 leveling out to be a fairly decent year in terms of the EBITDA margins. It's not very imminent as yet, and it could very well happen that probably Q2 might not be as bad as what we thought, or might not be as good as what some of them are anticipating. But the entire pickup could extend beyond Q3 as well. So if that were to happen, you will probably see a lot of these companies starting to look expensive. So I think there are pockets of opportunities given the M&A wave that's kind of it's soft and underlying, but it's there. So any smaller companies, mid-sized companies are what you look at. The likes of Birla Corp probably would not fit into an acquisition, but they would probably look at some acquisition at some point. But I know he spoke about organic growth being the focus and not inorganic. But I would stay away from the cement bag. If I were to stick my neck out and buy something, it would be an Ambuja. And why I say so? Because, the kind of value addition that will start happening once they've digested some of the new acquisitions and internally the rationalization that's happening on logistics and a lot of the processes, that is something where they'll probably be able to make a difference. So you saw that happen in Ultratech in the first couple of acquisitions. I think the template is the same. It's just a matter of time before all of those things start rolling out. Ambuja does look expensive from a relative perspective from what we've seen 6 months back. But I think if it were to be available at softer valuations, I would definitely like to add something which is much more resilient.
Okay, so that's a word on some of the cement names there. By the way, DLF is surging in trade, almost 6% higher. So let's put the spotlight on this one. We've got positive brokerage comments coming in from one of the foreign brokers. I think this is a JP Morgan call, and it's a pretty optimistic one on DLF. Tell us more about it, Sonal.
Well, yes, they've gone ahead. They've increased the target price on the stock to 1,000 rupees and have an overweight rating. What they like is how the balance sheet of the company is improving, and they think it would reach that $1 billion cash flow mark at the group level in FY25 itself. And this is due to strong sales cycle that the company has been seeing, and also because of compounding of free cash flows as the rental business. The rental business has also been continuously seeing growth. This opens up significant strategic flexibility at group level on acquisition, something that the brokerage thinks companies can do going forward. They see an upside on pre-sales, margins and cash flows as well in FY25. Now do remember they've already achieved 38% of the FY25 sales guidance. Their operating cash flows were up 100% on a YOY basis. This comes in after quarters of high debt the company has been facing. So this is a positive. They like the balance sheet strength and they expect that to continue going forward.
Okay, all right. Got it. Sonal, thanks very much. Prakash, hi, good afternoon. So, I don't know, do you share that level of optimism on cash flows and the road ahead for DLF? Of course, they're selling all of those houses. There are plenty of takers. But what about stock, the valuations and what's left on the table?
Good afternoon, Sanvi. So this is very similar to, the exuberance we've seen in some of the other businesses where order books start making you look, things look very promising. And that kind of sets you up for a fairly high risk vulnerability in case things don't happen. Execution is always a challenge. If you really ask me in real estate, they're going to be very, bottom-up stock selection that would pay off. I don't see as a trend anything favoring most other companies at the same point in time. So if you look at a Century Text, you probably have a very staid, resilient kind of a growth chart there. If you want to look at an NCR play or probably a Delhi play, there's a company called TARC, T-A-R-C, which is an offshoot of the erstwhile Anant Raj. They've done very well. The stock has done very well, but I think there's still lots to happen in terms of them monetizing their land bank, and which is primarily in the Delhi region. It's not Noida, it's not Gurugram, it's not some of the smaller pockets on the outskirts, but it is proper Delhi, and they've been able to convert that at rates which are fairly lucrative. So you will see these kind of one-offs happen on a bottom-up play come into the picture. But DLF, I'm not too enthused. Of course, it's done very well. The stock, in fact, you will need all this cash flows and earnings to justify the move that the stock has seen. So stay put for that. Let that have a time correction, and then probably you could look at it. Don't be in a hurry to buy.
Another one, there's Max, right? Max Estates, which has also done very, very well. But it's good to see DLF moving up because, investors in some of the other smaller sort of real estate companies in that area would look at DLF because, DLF's market cap is this and this market cap is this, and you know how it works. At least at some level, you kind of sort of look at the leader and what it is trading at in terms of various matrices. So, yeah, I mean, DLF is doing well in terms of where it is at right now. So, I mean, the market's back up above 24,500. So, it's looking, very, very good and sort of absolutely great move. MCX is up about 6% right now. MCX is, it's a new high today. 46.50 or so on MCX coming through. Keytex went up 20% on, I think numbers came in the closing hour day before yesterday. It was up 20, it's up 15 today. So, big 35% gains in 2 sessions flat. Policy Bazaar continues to do very well. It's a new all-time high on Policy Bazaar as well, 1660, 1670 on that one. Piramal Enterprises sold off 10% on Wednesday. It is coming back about 6% right now. These are all large moves. There is AB Capital, which is up 6%. There is, Nippon India, the mutual fund company, which is up 6.5%. Some of these names that we've not highlighted. PGEL Electroplast, the EMS company, 9% their gains there. There is Barbecue Nation, which is seeing a big pop. I mean, Jubilant Food moved quite a bit day before yesterday. But today it is Barbecue, which is coming up in a pretty sort of nice fashion. And of course, there is Ola Electric, which continues to sort of, defy all our odds, 20% again now, which basically means that from the IPO price is up some 70%. So it's got to really count for an IPO that size, $4 billion company moving like this is quite really quite something in that sense. Any thoughts, Prakash? I did ask you about Ola. I don't know if you've developed any fresh thoughts or insights into this one.
No, the only thought that would end up crystallizing with Ola is a FOMO. But then of course, I still would refrain from adding it, unless there is a very compelling proposition in terms of, the profitability getting much more visible. The incremental news flow has been fairly positive. And if nobody's coming to the market to sell off, you usually have, the float starts ticking in. And as you rightly said, for a size of this kind and a response that it got and the kind of post-IPO behavior is purely, liquidity driven, and liquidity can make things look very different, Prashant. So, I am one of those patient investors, like to sit on value, wait for it, and I don't have to do everything every day, right? So there's lots of opportunity that I'm sure we'll get once, things subside. But interestingly, what's happening is markets making a very clear, giving a very clear indication that anything that has been sold off because of the mood in the market on a particular day, which...
Yeah, I think we lost a line there. Prakash, but we got it. We got the point from you. Appreciate you joining in, and thank you very much for coming on with some of that perspective. We'll take a quick break here. First on the show, we are back with Ronak Onkar on the other side for more on markets. Stay tuned. All right, welcome back. 370 points higher on the Nifty. We're at about 24,500 plus, and it is looking pretty solid. Ronak Onkar is with us, co-fund manager of equity and head of research at PPFAS Mutual Fund. And of course, PPFAS Mutual Fund is are the calm guys, are the stable guys, and fantastic return guys. Ronak, I hope I didn't overstate things. I don't think I have. But what are you guys doing? I mean, it's looking once again like the storm has passed, calm has returned to markets, and we are back on a slightly upward-looking trajectory overall. Although I was still looking at the NSE 500 group of companies and seeing from the 31st of July till now, what is the lay of the 500 stocks, how many are up, how many are down, and there are lots of stocks down 15-20% still. Lemon Tree is right there on the top of the list. I mean, have you found any of these sort of stocks which have fallen in this global sell-off that you found attractive?
Hi, Prashant. Thank you for inviting me. So I don't think you overstated it, but I think the return point, which probably will have to struggle for a while, because since we spoke last time, a bit of cash has now built up in the portfolio as well. We are at about 16% cash. And your observation is correct. There are many companies in the Nifty 500 which have fallen by 15-20%, and that might seem like a substantial drop. But if you see a little bit, zoom out a little bit and see over a period of 3 years or 4 years, they have gone up 200-300%. So a 10-20% drop may not significantly change the valuation of that business, whereas the business has not grown by that multiple. So you have to be very cautious when you look at some of these falls, that they might feel like a significant drop in percentage terms on an absolute basis, but actually the business should also catch up to that level, so the valuations make sense over a period of time.
Ronak, hi. Afternoon, Rima here. Last time you told us that you're cautious in the capital markets business, they're cyclical, and you've trimmed exposure to some of these capital market plays. So in the last 2 months, can you tell us how your portfolio has changed?
So not much has changed, Rima. So we have been cautious about the capital markets businesses, and we have been trimming those positions. And we have been adding the companies where we think the valuations are reasonable, which is right now mostly in private sector banks.
Okay, you're adding positions in private sector banks. Hi, Ronak. So the look is new. It's a good new look. So the portfolio, you're saying the difference is that you're adding banks. Anything else? What else is new in the portfolio in the last 1 month?
Slightly nothing new in the portfolio. It's been the same portfolio. The little bit of cash that is now added, which was somewhere about 15%, is now 16%.
That. I mean, I know you guys have been probably running the highest cash levels in the industry because you took a cautious view and valuations were shooting through the roof. But incrementally, what is it, apart from private sector frontline banks, where you're seeing some sensibility emerge, where perhaps you've started doing the math, started doing the homework in terms of potential ideas? Obviously, I'm not asking for stock names here, but areas where you see some meaningful value.
So I'll tell you, there are a lot of ideas that we internally discuss and the sectors that we look at. The only problem over there is most of these sectors have also been bid up in the last run-up. So even if the companies that we own, say IT services businesses or some capital market stocks or even the banks that we own, even those valuations were not as comfortable as they were earlier. So where we are adding a little bit, that does not mean that these are extremely attractive valuations, but a little bit reasonable to accumulate. But rest of the companies in the portfolio, I would say, remain in a stable valuation to a little bit overrated valuation, but it's not a sell-off valuation. You have to be cautious about the business as well. And we are seeing the business growth. So even in our international stocks, which is now about 13% of the portfolio, we have seen stable earnings growth coming back to some of these larger companies as well. So IT services, tech has been doing well. We keep track of that. We are also tracking companies in the banking side where we already own bulk of them. So it's mostly about balancing the positions in the portfolio as to how much portfolio allocation we want to do. Rest of it is looking very, very difficult to find good ideas for right now.
All right. Hi, Ronak. When you talk about international stocks, you're talking about the FANG stocks, right? Which are 13% of your total mix.
Yes.
And HDFC Bank continues to be your top weighted stock at around 8%?
It is still the largest position that we own, followed by a couple of PSUs that we own.
All right. And PSUs would be, I think, Power Grid and Coal India are some of the top weighted stocks, right?
Yes.
All right. So HDFC Bank continues to remain top rated and you continue to remain positive on PSUs like Power Grid as well as Coal India. Ronak, I wanted to ask you about the tech space. You seem to have done a bit of a reshuffle, at least as per what I have in the last disclosed numbers. OFSS, if I'm not mistaken, it's been a 3 to 4 bagger for y'all. But I think you'll have completely exited out there. You could confirm that. And what you'll have done is you'll have gone and added the big boy, Infosys, on the base that was maybe a couple of months ago. You'll have increased that position by around 80%. Tell us more how you're reading tech.
Yeah, so in IT services, the big challenge with product companies like OFSS is that the growth comes in a very lumpy manner. So for example, a company like a software product business like OFSS, if it has to grow, it has to license new customers, and suddenly you will see a spurt of profitability and spurt of revenue growth. That has actually happened in that business. Whereas the valuations have been taken to a level where even the company's past valuations have not seen that kind of growth. So the business model has fundamentally changed, but the valuations have now remarkably changed for that business. On the other hand, if you see IT services companies, the large cap ones which are more stable, they have shown a little bit of change in sentiment. As we have seen, tech spending again has come back in the customer countries where they operate in. These companies are now showing a little bit of growth. But we have to also be cautious as to how much you pay for this growth. So at the time when we bought a couple of months back, some of the larger cap companies were looking reasonable. They have also now inched up in valuation since that point in time.
Ronak, speaking of technology, let's talk about that 13% part of your portfolio, which is US tech. There's a lot going on, right? You own Alphabet. That's one of your big holdings. And just, I think 2 days back, we had that Department of Justice ruling coming in. Now they're talking about breaking up Google because of antitrust issues and all of that. So I don't know, I mean, whether some of this, and this is not noise, this is actually real news now, at least the Google case, whether how you're interpreting this. And in general, tech earnings in the season gone by, we had a bit of a sell-off coming in as well. But for your portfolios, and since you're still invested, what are the trends you're forecasting, and what's the earnings growth that you still think will come through?
So the earnings growth so far has been very positive, and it's actually surprising to see companies of this size can also generate that kind of earnings growth. And that's because of the nature of the business model, where it can be global, it can scale without too much of reinvestment in technology. And on the other hand, there are other segments that these companies can reinvest in through the existing cash flow of some other business. So Google, like you mentioned, can take the cash flow that they earn from the advertising business and reinvest in the growth of cloud computing. Same thing we have seen with Amazon, same thing we have seen with Microsoft as well. So that reinvestment of capital at a high rate of return is something that we find very attractive in some of these companies. But of course, not all of them are very cheap and reasonable at the moment. And we have to be cautious even in them. Regarding the Justice Department's ruling, I think we will wait for the actual result to come out. But it's actually well known that Google has a very strong competitive position across many countries that they operate in. And they are a large market share in search advertising. And it sometimes might seem like it's an anti-competitive behavior. I think we should wait for the actual ruling to happen. Regardless of the fact the business economics does not change, the cash flow generation ability of the business does not change. It just might be a different organization. But I don't want to speculate. We'll see how the results actually come out.
Got that. By the way, you own Apple as well, right? In that
we
tech
used to own
portfolio?
a few years back, but we sold too early.
Too early.
But Berkshire's also sold now, so I guess you are ahead of them. Would you want to see it that way? You're ahead of Warren Buffett and team.
Too far
ahead. Nice way to go. Okay. By the way, Ronak, I think the Election Commission press conference is starting now to announce dates for the 4 state elections, which are about to kick off later this month. I think that's the Chief Election Commissioner announcing the dates. We'll sort of have the dates flash up on your screen, and then maybe we can cut to it for a bit. But Ronak, tell us what's happening with Ola. I'm sure you would have sort of met them pre-IPO rounds. I mean, I don't think you put any money in before, the anchor, or I don't think you did. But what do you make of the business? I mean, 70% on top of the issue price.
So pricing of the stock apart, I think some of these companies are very interesting to track because they might become potential competitors in the future to other companies which are doing very well today. So we are seeing a great transition in energy consumption right now from your fossil fuels to battery operated technologies. And I think that wave is very strong. And we have seen China exceed all the other countries in the world in terms of providing this manufacturing capacity or even having more number of EV vehicles on the road. that trend, if it has to materialize in India as well, we will need some strong domestic champions. So it can be this company, it can be several more companies which are coming up, or the entire value chain will come up in India. We don't know. But we are not going to invest at a time when it's like a venture-backed business. We would like to invest in more stable cash flow generating companies. And that's the style choice that we have made. It's nothing to do with the companies that are there out there today. And it's okay to miss the initial part of the rally. But it's interesting to see that there are companies who are investing capital in India to build that ecosystem of electrification, which is taking China and other parts of the world by storm right now.
All right, Ronak, we appreciate you joining in and giving us your take on various sectors, themes, stocks as well, the way you'll have reshuffled things, and still holding on to cash of around 16%. That's a large quantum. Let's see the next time we chat whether or not there is some deployment that does take place. But the markets are at the high point of the day. At the high point of the day as we speak, we're holding over the 20 DMA. It's been a good trading session. Nimesh joins us to help us out with the flow switcher. Nimesh, good session, good Friday, good end to the week.
Absolutely. And today it looks like a clear risk on rally, Nigel. Backed by very large FI buying and some aggressive short covering as well. Remember, as far as flows are concerned, I've been saying for the last few days that at least one large FI desk was having a very large sellers for the last many days. Well, that has tapered off a bit. At the same time, today there is an aggressive buying at another leading FI desk, and largely that flow is into the mid-cap names. That probably explains that the mid-cap index is up almost 2% and big rally in a lot of mid-cap stocks. And also, even though it's a long weekend for us, the volumes are still pretty okay. There is not like, the DIs are not participating to that extent. So today's rally is backed by good volumes as well. So, that's a good sign to me that this is backed by very large FI buying, especially in the mid-cap stocks. From a sector point of view, IT and select financial is where you've seen aggressive short covering. But from a cash deployment, it's basically the defensive names which have seen some buying interest back. So while there is a momentum backed by flows, but the domestic mutual fund seems to be quite bullish, or maybe quite shifting towards the defensive names, whether it's pharma, whether it's consumer names, or for that matter even IT. So that explains the kind of move from a flow perspective. But for the first time in many days now, there is aggressive buying from the larger FIs in the broader market stocks.
Well, that's good to hear, Nimesh. So pretty good going out there. And the broader markets participating makes a lot of portfolios feeling good as well. Tell us more about individual stocks. What are you picking up?
So in terms of individual names, the first stock is Electronic Marts India, EMI. There's a large block in the money. The stock is record as well. So there is buying interest from larger FIs. So expect high delivery volumes, and looks like some bit of buying is back in Nestle at these levels. The third stock is Safari Industries. Again, stock has been consolidating off late. I've seen a big move after the earnings, but there is a block bid being offered by an institutional holder, and looks like the clean out trade can happen very soon in Safari Industries. And the last is DLF. Sonal spoke about the JP Morgan note, but in general there are buy flows from larger FIs. So there is delivery based buying happening in DLF at these levels, and of course there was a JP Morgan upgrade as well. So I think that explains the big move in DLF today.
Nimesh, Rima was wondering, you mentioned long weekend. Are you telling us something? Monday is a... or are you off?
No. I mean, because yesterday was a holiday. there are a lot of people who are still enjoying a long weekend, not like us who are working.
I'm just pulling your leg. Nimesh, on Ola, have you picked up? I mean, where is the buying coming from? Any on the institutional side?
Well, Prashant, from a flow perspective, I do know that some large HNIs bought on the first day of the listing, which was around 85, 86. That's when they bought very aggressively, because at that price it was quoting at $3.5 billion, whereas in the private market the valuation was around $5.5 billion. With this move today, around 130, 135, it is actually crossing that level of $5.5 billion of market cap. So I'm not too sure whether there are large institutional buyers. Yes, there was an HSBC initiating report today. But from a HNI perspective, it is more about buying on the first and second of the listing and not at this price.
All right, we'll leave it there. Thank you very much, Nimesh, for that. And so that's essentially a list of stocks to watch out for, and some intel on what's happening with Ola. We'll take a quick commercial break here. We are going to come back in just a bit. We'll tell you some short-term trading ideas with the technical experts, and there is 20 minutes to go for close. Stay tuned.
Welcome back. 24,560 on the Nifty. Now it's a 400-point rally, and the Sensex rally has extended itself to a 1,400-point gain. In terms of these platform companies, new age tech companies, PB Fintech is up 7.5%. Brainbees Solution, the company which owns FirstCry, is up another 5.5%. Paytm is seeing some buying. Zomato too is up close to about 2 to 3%. And now some PSUs are also coming into the party. So pull up, I think BEL. BEL stock has spiked up. BHEL is another big mover. But let's find out some trades that you can take in the last 10 minutes, which you can reverse on Monday. Mitesh is now with us for those calls. Mitesh.
So I have a BTST on ITC. Keep it stop at 498. Look for targets of around 512. And Nippon Asset Management India, that's NAM India. I think that's making a fresh swing high. That's a buy with a stop at 670 for targets of 720.
Thank you very much for that. Let's talk about IT. That's the big sectoral winner for this week. The IT index is now up close to about 4.5%. But remember, even NASDAQ, the mother market there, the technology stocks there, have rallied 5.5% this week. And they've reversed the fall that started from 1st of August. So now NASDAQ is flat on a month-to-date basis. Now, today I spoke to a few analysts, like what's driving the up move. They said it's largely the better-than-expected U.S. Economic data. The fear was recession, and therefore Indian IT stocks, which get about 70% of their revenues from U.S., will get affected. But now the positive economic data is suggesting that the outlook for Indian IT will also be better. But just take a look at the kind of return that we've seen in Indian IT from 1st of June. That's when the rally started. TCS up 20%, Infi up 30%, HCL Tech up 25%. Midcap IT names like Persistent have seen a rally of 40% in the last 2.5 months. 1st of June is when that big rush towards IT started taking place. Emphasis is up 25-30%. So the reasons for the up move in the last 3 months is one, there was defensive buying ahead of the budget, election, etc. 2, Q1 earnings suggest that earnings may have bottomed out. 3, there are rate cut hopes in the United States. And 4th, the main segment, BFSI, has reported better than expected results in Q1. And BFSI contributes about 30% to the overall IT revenue. But the risk from now on is that IT stocks have rallied in the hope that it's bottomed out and things will recover. But it's not that in Q1 we've seen any upgrades. If at all, we've seen a few downgrades. So there haven't been any upgrades which, justify the kind of up move that we've seen in the last 3 months. 2, the expectation is that in FY26, things improve. What if it doesn't play out? That's the earnings risk. And 3rd, now Nifty IT is barely 5 to 10% away from its post-COVID peak multiple. But, at that time, IT companies were seeing a strong, high double-digit kind of revenue growth. And now we're talking about a high single-digit revenue growth. But valuations are pretty much back to where they were. And for names like Persistent, Coforge in the Midcap IT pack, valuations are even higher than what they were, post-COVID. So that's just, 2 bits about what's happening in IT right now. Hemang Jani is now with us on the show for the last 15 minutes. Hemang, come in on IT, what we've seen, especially Midcap IT on fire.
Yeah, good afternoon, Rima. I think the IT sector has reported a reasonably good set of numbers, be it large cap or mid cap. Also, a couple of things that stood out was that the BFSI, there are positive data points. The hiring is back, and the sector actually did not do well for an extended period of time. Only in the last 2-3 months, we are seeing kind of a catch up. So I think, as a part of the sector rotation, you're seeing some action there. And we think that within the entire space, Midcap IT will do much better because the numbers were better, the valuations are slightly, better. And we do think that there is a larger correlation of the Midcap companies with the US markets. So something like a First Source, Zensar, these are the companies that we think are relatively better placed.
Okay, so that's a take on Midcap IT. By the way, let's look at Hindustan Zinc. The stock has taken quite a knock now. It's down almost 10%, 9.5% lower. The OFS pricing seems to be a bit of a disappointment. The offer for sale from Vedanta is coming at, I think, 486 rupees, if I remember the exact figure. And that was always a discount to the market price, even on Wednesday and then today as well. that gap remains 9.5% lower. Hemang, hi, good afternoon. What did you make of this news? The OFS coming in instead of the government selling its, the promoter selling, Vedanta itself selling. And the pricing, I think, is not something the street has liked. But what's your view on the stock, the company, and what would you do?
Clearly, the fact that promoter increased the size and the overall demand was not that encouraging. The issue will sail through, but I think one will have to really see what kind of response finally do they get. I think rather than going in for Hindustan Zinc, it would be good to focus on some of the other metal companies because they have corrected. You're seeing a bit of a better data points, and even the base metal prices are showing some sort of a rebound. So I think Hindalco, Tata Steel, are the better bets. Even Vedanta, if the issue goes through, probably you will see a good amount of pop in Vedanta. So I think these are the names that you'd be more comfortable buying into at this point.
Okay. All right, Hemang, stay on. We'll have some more questions for you in just a bit. Right now, need to take a very quick break with the news that the market is soaring with the Nifty up 400 points. Back in just a bit with the last leg. Welcome back. So the move has been absolutely breathtaking today on the street. Hemang is still with us. Hemang, we spent a lot of time discussing Ola, but let's also talk about M&M. M&M has had another superb ride, and I think this new Thar launch, it's only invigorating investors even more. Again, valuations, that's the question. Do you still like the stock?
I definitely think so, because Sulbhi, if you look at the entire, auto sector in the last, let's say about 1.5 years, if there is one company which has stood out in terms of very smart product launch and the revenue market share gain, I think Mahindra clearly has done much better job even versus Maruti or other players. And which is reflected in the way the market share movement has been there, and particularly in the automotive SUV category, they are by far the market leader in terms of market share. Also, you're seeing a bit of a revival in the tractor segment, which is a slightly better margin profile. So I think though Mahindra has done so well, I think given the way they are going about their product launch and the overall market share, I think there is some more room to go on the upside.
What about DLF? That's the big real estate stock which has moved up. Nimesh was telling us that there is some buying at the desks for DLF. There was a JP Morgan upgrade. In the real estate pack, which one do you favor?
So Rima, if you look at real estate sector, if there is one pocket which has seen the maximum price increase and where DLF has maximum presence is the NCR segment, and given the product portfolio that DLF has, both residential and the commercial, where the yields are showing a little bit of improvement with the improvement in the net debt position, I think DLF looks to be a winner. And though the stock has done well, I think if one has to be with real estate pack, DLF would be a number one pick there.
Okay. As we're in the last final moments of trade, some more stocks catching the eye. Look at names like PB Fintech. PB Fintech's up about 7.5%. It's had a good week. CDSL is going home with a gain of almost 9 to 10%. And then, of course, we've been discussing Midcap IT. Ethos is looking good. 8% up on Ethos as well. Lots of high flyers over there. On PB Fintech, Hemang, what thoughts? Do you like any of these so-called new age companies or platform companies?
Companies stood out for us. One is, of course, PB Fintech, which has done well. And in the con call, the company indicated that they are also looking to, get into the personal finance segment and lending business, which may create, additional trigger in terms of, earnings, etc. Also, delivery, which has not done so well in the last, 1 year, being a platform company, I think the numbers were good. And given the presence that it has across the value chain, I think, next 2 or 3 quarters, the company should do well. So PB Fintech and Delivery are the two platform stocks that we like at this point of time.
In Midcap IT, particularly on First Source, it's a stock which has moved up 70% in the last 3 months. Yes, the company has gone ahead and raised the revenue forecast, but we're still talking about low double-digit kind of revenue growth. So a 70% up move?
So Rima, typically the mid-cap companies, they are high beta. So whenever you see the delta change in terms of numbers, in terms of outlook, the price reaction will be, too much, which is what we have seen across the market also. So I think it has been a laggard for a long time. So though the stock has moved up 70%, as you rightly said, in terms of valuations, it is still, looking quite attractive, about 15 to 18% discount to some of the similar size mid-cap to large-cap companies. So I think people want to have a pie of the company wherever the guidance is upgraded with slightly better margin out.
Okay. All right. Hemang, thank you very much for all the views today. Good to have you on, and you have a nice weekend. We hope to catch up again soon. We're down to the last 2 to 3 minutes of trade now. So let's wind down what has been a really spectacular session for the market. The market's now just a whisker away from reclaiming the levels where it was before we had the whole Manic Monday yen carry trade storm hit us. This is a powerful recovery, 400 points up. So let's take a look at the leaders. Technology all the way. Wipro, Tech Mahindra, TCS, HCL Tech, LTI Mindtree. So the gains are stretching anywhere between 2% to 4.5%. Beyond technology, some of the auto stocks have been really revved up today. Ola Electric, obviously, beyond the Nifty, is the stock of the day. Takes all the applause over there with that 20% move. But on the Nifty, M&M, Tata Motors, these are stocks that have had a good run. By the way, there's been some profit taking on Maruti. Maruti didn't quite hold up like some of its other peers. The other part of the market that really supported the bulls was banking. So the Bank Nifty is ending with a gain of over 1.5%. And a lot of the big constituents like ICICI Bank, HDFC Bank, all up anywhere between 1% to 1.5%, 2%. So all round green screen on the Nifty.
And a near 2% rally on the mid and the small cap index, and closing the week on a winning note. So the Midcap and the Nifty index were higher by 0.7% for the entire week. Outside of the large indices, Ola Electric is clearly the stock of the day, 20% upper circuit on that, 133 in terms of the last stick. Midcap IT names like Birlasoft, First Source catch your attention. DLF posts the JP Morgan upgrade, zooms up 5.5%, and then you had strength in IEX, NBCC, Hindustan Copper on the way up. On the way down, Hindustan Zinc got a bit of a slamp down nearly 10%. But with that, we're going to wrap up trade for the day, for the week. Thank you very much for watching this show. Don't go anywhere. Our special editors roundtable is coming up after the short break.
So that Hyundai will be a big IPO. Correct. 3 billion. It's a call. Never know. Maybe he's real. We don't believe at this.
But I don't think anybody expected this move. I mean,